I think it's a fantastic quarter right off the gate. That's what we wanted to see. Revenues are growing, which was very important. EBITDA and net loss, that was expected. I think they can control that down the road, and we know that. That's our thesis. They're investing, like Deirdre said. So I think overall, very good quarter. I want to see what the active riders were and revenue per rider and all that. I don't know if they'll disclose that, but if they can come up, I'm sure it was higher than before, so I think that's good.
Well, active riders was 20.5 million. The forecast I had was for 19.7.
It's up 46%.
Up 46%. Yeah. The forecast was up 40% year over year. So that was a little better than expected. The revenue was a little better than expected. You just mentioned the loss that they made was expected, but this was a much bigger loss than forecast. So how many quarters can you stomach of those losses widening, even if you've got that top line growth that you want to see?
Yeah, I think quite a few quarters, at least for another till 2022, based on my numbers, because they're investing. They're investing in scooters, they're investing in many other areas. So I think right now it's a market share game. It's a land grab situation there. So I think they're going all out. They have a big competitor out there who's coming out this week. So I think they need to be up there with full guns blazing there.
Can I ask you, 1.9 billion in spending in the quarter? It's up from 643 million a year prior. Is that something that we're going to see consistently over the coming quarters, that type of high spending?
Yeah, well, the revenues went up too, quite a bit. So I think in terms of percentage of revenues, I have to see how much that is, but I'm sure it's pretty reasonable. And that was within the expected range, so it's not very unreasonable there. So they are spending, like I said, right? Down the road, what we are expecting is the driver incentives get more targeted, much better. They get more utilization from the drivers, and the rider incentives get better, much better rather. So I think overall they're going to rationalize their operations, but right now they need to grow the top line, which is what they're doing, which is a good story right here.
Are you tempted to take part in the Uber IPO?
Well, I'm not. I think Uber is also a good company, but we are not. We are staying true to Lyft because we like their defined path to profitability. We like their pure play strategy. So I think that's why we invested here. But Uber is a good play too. It's a global play. It's a proxy for a global ride-sharing business, pretty much. So I think they will do their best, and they'll have their own set of investors. But right now, I think Lyft is on track.
Are you skeptical? You seem skeptical about these Lyft numbers.
I'm skeptical. I think I'd be more inclined, respectfully, to invest in Uber. And I like to hear the earnings before I actually invest in a lot of these IPOs. I think that's important. I also think the placement, and I know, Mike, you've watched this closely, but the placement of these two as industrial names is intriguing.
Yeah.
I think they would have been better off being sleeved into what they probably are, which is more of technology company.
I mean, size matters in the long run, so I think Uber will do well, but Lyft is more targeted. I think if you want profitability, if you want a lean and profitable company, I think you'll get it faster with Lyft rather than Uber.
To what degree, I mean, you're talking about the spending numbers and driving, I mean, to what degree can, on a short-term basis, this company buy revenue? I mean, they have to make a good showing in the first 3 months out of the gate. Uber's on the way. You can spread the money around and goose ridership, can't you?
Yeah, I mean, they will, you mean how can they grow their revenues?
I mean, direct marketing, subsidizing drivers, getting drivers out there.
Yeah, they will get out there, but you know, the market is still untapped. There's a huge market out there, less than 3% penetration, and it's growing. The addressable market is growing every year, so they have a long way to go. So they will do everything to get out there. They have enough room to grow the top line, so I think that's what they'll do.